Welcome to the Moneycorp market update for June 2020. I am Christopher Mcmurray. The lockdown in the UK continues and the majority of people continue to work from home. As you can see from my kitchen backdrop. Please excuse this during these special and unprecedented times. Firstly, an update on COVID-19 virus and the pandemic, as this is what has been dominating the newspapers and the markets for the last several months. Globally, we have hit 10 million cases, and sadly, 500,000 of them have died. China has reported cases in Beijing, circa 500 in the month so far of June. The Chinese have reacted quickly, with all movement in and out being strictly controlled, and the city has raised its emergency level and grounded hundreds of flights. The US is reporting an increase in both cases and deaths, as they have tried to open up the economy. The main areas of issue are California, Florida, Texas, and Arizona. Florida has a high population of vulnerable people due to the older generation living there. This could see significant problems and deaths down the line. On Friday, the 26th of June, the Florida case count rose to 7.8% against the previous 7-day average of 4.1, a very significant jump. The US as a whole has the highest number of new cases on the 25th of June, the highest since the 25th of April. And therefore the curve is increasing, which is concerning. Risk assets have been heavily sold off since the recent highs on the 8th of June, the S&P down circa 6% since then. Brazil, India, Russia still having a huge increase in COVID cases, with Brazil having the highest increase in one day. In the UK, the curve has been tailing off, which is positive news, as the number of cases are circa about 1,000 per day. However, there are concerns of a second spike due to the recent heat wave and the scenes across the UK on many of the beaches, in particularly Bournemouth, which have been heavily publicised. Many will be glad to hear that the pubs and hairdressers will be back in business as of the 4th of July. I'm very much looking forward to a haircut. Not sure pre these times where I would have been so excited about it and put that ahead of going to the pub, but very much needed. This could steady the ship as the economic standpoint and remove employees from the UK furlough scheme, which is a significant positive to the UK economy and reducing the debt level. Moving on to the FX markets, sterling dollar opened the month at 23.20 and traded month's low on Friday of around 122 and now trading around 123.50. However, the high was just north of 128. Sterling euro opened the month at 110.85 and currently trading around the month low of 109.75. However, did see highs of around 112.80. So in a reasonably tight trading range. However, more significantly, it has broken the 110 or 0.91 on euro sterling handle, which could see us target the 107s, which we saw in March as the coronavirus outbreak multiplied. This hasn't been helped by the fact that the Brexit talks haven't really been productive. Brussels is launching extraordinary attacks as UK refuses to back down on its demands. Boris Johnson threatens to walk away from the EU trade talks after Merkel wants UK to live with the consequences of Brexit. Downing Street confirmed Boris hammered home that the UK is prepared to leave on Australian terms if an agreement cannot be reached between Britain and the EU. Regarding this, Australia has no bespoke trade deal with the EU, but has a series of mini deals in place, which some critics describe the proposal as the same as a no Brexit deal. Looking at the UK as a whole, the British economy shrank by a record 20.4% in April, as the first full month of coronavirus lockdown set the country on course for the worst recession in more than 3 centuries. Data showed no area of the economy was left unscathed after the government imposed tight controls on the business and social life to limit the spread of the disease. The Bank of England voted by the majority of 8-1 to increase the target stock of purchases UK government bonds, financed by the issuance of central bank reserves, by the addition of £100 billion to take the total stock asset purchases to £745 billion. There was zero interest from the members of the MPC to change the bank rate, keeping it at the same of 0.1 from the previous meeting. This keeps the door open for further decreases and potentially negative rates, which would be negative for the pound. Moving on across the water to the US, the Federal Reserve has forecast for the US economy to shrink by 6.5% this year and announced it will keep interest rates at zero until 2022 to help aid the recovery. Fed Chair Jerome Powell said in a virtual press conference, "We're not even thinking about rising rates" on the 10th of June, just to really hammer things home to the market. Continuing jobless claims in the US have started to decrease from the highs of circa 25 million from early May, and now circa 19.5 million. There has been significant concerns regarding the opening of the US economy as cases have spiked to record numbers. Texas is trying to clamp down on this issue by closing bars and restaurants or to face renewed restrictions. Looking ahead, and key things that we're going to have to negotiate in these choppy waters are going to be the continuation of the virus and how it is spread. However, millions has been spent on the development of a vaccine or vaccines. Any developments on this vaccine could see market return to a higher risk appetite and the push towards higher risk assets and to a normal situation. The big question is the virus mutating, as some researchers believe it has? And will that infect human cells more easily? And will current treatments be able to affect that virus in the same way? Also, the antibodies from COVID-19 infections only potentially last a few months, a study has shown, which raised questions about the length of immunity against the novel virus. Central bank policy and any changes in sentiment, will they look at negative rates in the UK and the US, which haven't really worked for the ECB though, and personally leaves them vulnerable with less in the toolbox if this continues and there is additional stimulus required. In the meantime, central banks are unlikely to be in a hurry to end current rounds of programs and potentially expand them further. Will there be any financial aid from governments to help spending and increase movement of money? There is rumours of a decrease in VAT by the UK government from 20% to 15%, which it did from 17.5% to 15% in December 2008 during the global financial crisis. Germany has already actioned this with a temporary VAT cut from 19 to 16%. Looking forward, how will the introduction of travel around Europe and holidays affect the spread of the virus, with borders and international flights getting back on track? Finally, Brexit, the horrible B word, which has hovered over us since 2016. What will happen as we approach the end of the year and the end of the transition period ends? I hope this is all useful and insightful for you. If you have any questions or need any help with anything, please do not hesitate to reach out. All the best to everybody and stay safe.